Broadcast. Want to welcome everyone to Global Markets Radio Daily Recap. I'm your host, Andrew Spanton. Tuesday, April the 12th, 2011, 4 p.m. Eastern. What a day! What a day! Oh, baby, what a day. Wow. Can you say volatility in the house? The yen's exploding. Really, the story in Asia. Absolutely exploding on an upgrade by the Japanese finally giving in to the pressure that it basically is in line. The disaster in the nuclear fields is in line with Chernobyl in 1986. Chernobyl spewed radioactive smoke clouds in the air 3 miles, maybe even 9 if I'm correct, 9 miles in the air. I believe Chernobyl was 300 times worse than Hiroshima. So the fear, I think, that this is going to be a disaster, along with the fact the S&Ps were down, really fun, and the fact that the yen had sold off so significantly on a percentage basis. I mean, come on. That rubber band was so freaking stretched. Now listen, we were long. And we were able to buy the pullback, got stopped out in some things, but man, I mean, you look at this dollar yen, it had some bounce. You came into the U.S. session with that kind of news. Listen, we're back short again. Oh, babe. But look at the daily, rolling over. As we said, if you check my Twitter and my Facebook page, put that out there. But once we broke here, I mean, look at that rally. So we walk into the U.S. session, it was an easy layup. Because the news was that big. The stock market was overbought. Listen, a lot of other reasons why the markets went down today. But certainly in Asia, that was it. Wow. Oh, I'm going to freeze up. I know it. Damn it. Yep. But you look at this dollar yen. Oh, baby, it's over. Now you do your Fibonacci on dollar yen. But we'll get to that when we do the charts. I'm just giving you a little tease. But, so certainly down here. Oh, baby. But you look at the S&Ps also. And, you got this big breakout in the channel line. Well, this now becomes support. That's about 1290 on channel line support, which lines up pretty much well with the 50% retracement. So, to me, this the market's certainly coming in. Are we going to collapse? This was the easy trade. The hard trade is going to be, what do you do down here? Is this a buy on pullback? Are the animals in the house? Are they going to be able to buy the pullback? Listen, the VIX was only at 1730. It was up only 70 cents today. Bond yield's still at 350. So, I thought the story out of Saudi Arabia was very interesting. They're cutting production. Story not confirmed by 500,000 barrels because of demand. And now that has to get you worried. Now, it could be a story to get oil down, but certainly for the global economic recovery, that is not a good thing. That's a lot of oil. But I'll tell you, some of the news, all the economic data pretty much last night was horrendous. Absolutely horrendous. Yep. Australia business confidence, 9 versus 14 last time. That's not good. And again, the Japanese story, the fact that they're going to have to repatriate more money. Let me tell you something. This trade is not over. I think this euro yen is coming in. Big time Fibonacci retracement. Aussie yen, easy 85. I mean, that thing bounced almost 200 pips today. Crazy. And Australia's going to be big time affected. And remember, net spec longs in the Australian dollar is at 90,000 contracts, like $9 billion. Record. So we really may have topped out. Now, I'm not sure if we're not going to have another run at it, but certainly for now, I think you got to be short. Stock market looks weak. The whole kitchen caboodle, baby. But you look at that S&P, it looks very bad. And again, numbers last night. The only one German CPI coming out of line 0.5%, but machine tool orders preliminary out of Japan 49.5%. Terrible. CPI out of London 4%. The estimate was 4.5. London trade balance was supposed to be down 8 billion. It was down only 6.8. Revision was weaker. Core CPI 3.2% coming down. DCLG House Price Index only up 0.7. It was supposed to be up 1.3%. 2 months in a row of only up 0.5, 0.7. I think London's rolling over. I don't think London's raising rates by the end of this year, but hey, listen, maybe. It would be suicide in my opinion. I'm telling you, I was just telling the group this. You go back to 2008 in the summer, I'm pretty sure Trichet was the last one to raise rates and then the economy collapsed. So, you know, this might have been the biggest blunder. When Trichet pulls the trigger, he's itchy on the finger, and it just means we're going to go roll right over. And a lot of Fed officials have been saying that has been pretty soft the last 2 months. And, I haven't seen it in the manufacturing PMI numbers, but certainly retail sales haven't been that great. Car sales haven't been good. And now you got the supply constraint. Banks have not doing lending. They're just charging more fees. Oh, that's right. Wall Street's still doing deals. So Goldman's doing very good. Although I think Goldman numbers are going to suck. German Zoo, terrible. 7.6, supposed to be 11.7. And remember, last month's number was 14.1. Disgusting number. Eurozone Zoo, remember that's not with Germany, but the entire Eurozone, 19.7, supposed to be 29.8. Big sell-off there. And again, that's probably reflecting the Japanese situation. Canadian trade balance a little bit light at 0. House prices at 0.4, a little bit better. U.S. trade balance weaker than expected, negative 45.8 billion. Import prices surging 2.7%. Right, no inflation. Bank of Canada rate decision, no freaking way as expected, and statement certainly indicating they're not sure. And they upped their growth estimate nicely, but still many certainties in the marketplace. There in no way inflation is contained. And they're keeping rates low. IBD optimism index at 40.8. That was supposed to be 45.7. And the budget, Obama sorry guys, an extra 25 billion in the red. I mean, crazy. The estimate was for 163. Oh, but wait, it was better than last quarter, 222 billion. Quarter? I think it's monthly. Monthly, yeah. Sorry. But again, just disgusting. The red ink. So, as far as numbers coming out tonight, we got plenty of them. Plenty. Axel Weber speaking. Should be interesting what he has to say. Not sure of the time on that. London, claimant count. Average earnings supposed to be up 2.6%. I think that's going to be weak. Average earnings is going to be lighter. Unemployment rate supposed to hold steady 8%. I'm not so sure. It could be, maybe it's better. Who knows? But I think the average earnings is going to be down, and you're going to really see a whack on the pound on that. Forget about the claimant count. Really, yeah, unemployment rate might tick down, but the big number, in my opinion, is average earnings, because that's more inflationary. That's what the Bank of England looks at. Swiss producer prices, remember they had a big CPI number, up 0.4 is the estimate there. Wage prices out of Germany also supposed to be at 1.3%. Remember, if that number's higher, then they will be thinking inflation. U.S. retail sales core supposed to be up 0.7. Headline up 0.6 from last month's 1% surge. Business inventories up 0.8. We get the monetary policy report out of Bank of Canada. Crude inventories also at 10:30, supposed to be up 9 million barrels. Press conference out of the Bank of Canada could be interesting, but we did hear most of it. Governor Stevens out of the Australian Central Bank speaking. Look for a possible reversal in the Aussie there. Oh, baby. But remember, this isn't over. The S&P, if you look at the S&P, it's only up down 25 handles from the high. To be down another 15, 20 handles tomorrow is not out of the question at all. Look how overbought we are. Boom, boom, boom. Bada bing, bada bang, bada boom. So we easily could come in. So, and remember, people, you can try my service for 1 week for free. For free. Try the product, baby. Read up about it. Send me an email, info@globalfxradio.com. Take a look at this dollar index. We got dollar yen there. And, my problem is I'm thinking maybe. It didn't hit my channel line. Really didn't hit it. Would have been nice. Really would have been nice. But it is an outside candle. It did close fairly well, the Dixie. It certainly could be due for a bounce up to like 75.50, somewhere around there. So this dollar index to me certainly looks like it could be a nice long. We'll see. The only problem is the euro really didn't top out. It's an outside candle, but it's closing at the highs. That's a bullish sign. If it was closing towards the lows, then it's only 30 pips. But if it was closing towards the lows, then it look a lot better. If it was red, closing below previous day low, outside candle, I'd be calling for a top. Forget about it. Oh, baby. But I'll tell you what, if you do your extension from the high, that was about 142.50, to the low, 140 around there, and you extend it, which we do here, right? We extend it from here. You really do get the full extension right up to around 145 and change. So just because we didn't get the channel line, there are certainly other indicators that we could have topped out. I mean, look. I mean, this is a monster channel line. And maybe they break it out to break it down. But it certainly seems like we should pull into 143 on a pullback. And it's not like we don't have bad news out of the Eurozone. The numbers sucked. And we have the stock market that sold off. So, one of my rules, again, is always having 3 reasons for a trade. Well, we got them. We certainly have them. And, the problem is we might put up a fight. Maybe it pushes higher, but how much more it goes up from here? Does the euro melt up from here? I don't think so. Not with the stock market coming in, which is usually dollar positive, right? Now, where the dollar is negative, dollar yen, which is closing terrible. And again, heading up to its moving averages. Another 82.50 looks easy. I got support there. It breaks the 30 exponential, probably comes back after hitting there. And I would imagine, again, we got a Fibonacci retracement. Absolutely. Look at that. 82.15 in dollar yen. So I think this is a high percentage trade. We take out 83.40, say goodnight. Short term. Sterling, daily chart, rolling over. Got a selling A strength. Listen, we said last night it could have been a top. We said we were concerned about this. But hey, we took our previous day lows. Numbers were terrible. I mean, come on. You got to be a trader here. Those numbers were terrible. Sterling yen, I mean, my goodness, did we clean up in sterling yen? I mean, that collapsed in the U.S. session. Oh, baby. Bye-bye. I mean, look at that bounce you had. We bounced almost 150 pips from the lows last night in Asia. Crazy. And then the U.S. session. Bang. Oh, God, I love it's so much more fun when they go down. I'm sorry. I don't know how you people who are bulls can tell me it's not more fun when it goes down. It's just amazing. I mean, this was pain. Painful. Oh, baby. Another one, by the way. We're going to come right back to the moving average. Abso-freaking-lutely. See, I mean, not only do you have sterling, which looks terrible, you've got dollar yen that looks terrible. I mean, that is the perfect storm for a sterling yen. Say bye-bye. Now, again, one of the key things to understand is, euro sterling needs to come in. If euro sterling, doesn't rally and it comes in, cable could be the relative strength winner. Maybe the numbers are going to be better. But you got this euro sterling completely breaking out. That should mean cable going lower, but we're at the top of a channel here. We're at a big spot. I mean, are we really going to significantly take this out? Oh, it looks it. But again, we're getting a little tired. We're getting up right up to this resistance level. $89.50. So we get up to this double top, $89.40. I think you got to be looking to be short this thing, and then cable could become a relative strength winner, and the euro, which is due to be the loser. I mean, due. Come on. The euro's become overbought across the board. Euro Canada, look where that sucker got to. Oh, baby. Breaking out. Did very well on that one. Thank you very much today. 140. Bang. Ooh. But, we look at some other ones. Obviously, let's take a look at Dollar Canada. That's trying to make a move. We even said held in there inside day. Listen, we had Euro Canada. We had no Dollar Canada. This looks like it's got a little more. Maybe up to 97. Right below it. Looks like we're going up a little bit more. Dollar Swiss, obviously with all the pandemonium. Swiss franc rallying today nicely. Thank you very much. Sold that strength, baby. Coming down to big level. Big. I mean, we double bottom possibly. We certainly double bottom. I mean, no doubt about it. Could we bounce here? Sure. But again, if you're going to buy this thing, you want to be short this Euro Swiss because that sucker is melting. I mean, this baby looks gorgeous. We broke this entire wedge. Bang, bang. This baby is toast. Sell any strength. I'm still short. We pop up to 130.50. Sell. I don't think it's even going to get there. Maybe 130.20. I think we're doing a Fibonacci on this one also. So the problem is, if Euro Swiss collapses and Eurodollar still puts up a fight, Dollar Swiss is going to collapse. So if you're going to try and pick that double bottom on that Dollar Swiss, which I don't necessarily recommend, you certainly want to be short Euro Swiss because both those trades should work. I think the euro comes in. I think this euro is going to roll over, and you'll be just fine. Dollar Swiss will hang in there, and maybe gets caught up in the dollar index trade. And now the Aussie. Oh, baby. Well, I tell you, what a shot. I just can't believe this thing rallied back 150 pips from Asia bottom. Crazy. Nuts. Nuts, I tell you. Everything's getting radiated. Australia, it's in the sea path. I don't know, but as soon as they just killed the Aussie on the Japanese news. And the business confidence, too. But this looks not... I think we go to 103. Right there. I think we definitely take out today's lows. That, for sure. And I think you got to do Fibonacci. I think at this point we definitely can do a Fib. That's 102.50. Easy. And that's 30 exponential moving average. Oh, baby. New Zealand also topping out today. I'll tell you, Aussie Kiwi. Wow. I mean, look at this monster candle. That is one hell of an outside candle. It don't get no better than that. You got to be short at any strength. Look to sell it. I think the New Zealand dollar completely topped out. For now. It's not over. But I think we topped out. Big time. And I think we do a Fib. And if the market's 76, if the market's topped out, all these charts are going to look in our favor. The stock market really continues to sell off, then these trades should definitely work. If the market reverses and goes back up, well, I don't know what to tell you. Team, I'll see you back at 5 o'clock. 5 o'clock. Again, if you have any questions, feel free to email me at info. Now, again, I think the market comes in more. I think there's more to these trades. I think there's going to be a couple of days of this. Could we reverse by Friday? Hell yeah. Stock market's so resilient. Always comes back, right? But one of these days we're going to go into a bear market. I'm not sure if it's here yet. Again, also talk about tax selling ahead of April 15th. Market does do this little head fake. It did it last year. And then, right into the 15th, it started to rip again. So again, I'm not calling for a top, but a short-term correction looks like we got a little more to go. Have a good one. Bye-bye. Love the yen. Love the yen. Blue Horseshoe loves this yen, baby. Hopefully you got my twit. Later.